is also paying them interest on capital from the profit. So they are entitled to interest, of which we've done the calculation earlier. So Adedoyin has 250. Funmi will be given 200 for the capital. Then Anu will be given 15 naira. And let's add it, you have 500. You know, in the question we are told that they are active, the partner are active, and they are entitled to salary. And in B, additional information on B, because it is what they agreed on by the partner. So salary, we have Anu is going with 1,000. Then Funmi has 750 at the end of the day. So that is 1,750. Then now what we now do is that add this, after paying interest and paying salary from this profit, the remaining amount will be shared by the three partners, which is called share of profit. Now in the question we are let's add it. Let's let this from this. We have what we call 2895. Now let's share 2895 among the three partners, and the ratio is 4:3:1 because Adedoyin has a capital that is many, so we have to follow the sharing profit ratio, which is 4. So when you add 4 plus 3 plus 1, that gives you 8. So Adedoyin will be 4/8 times this. That will give you 1, 4. We want to share this amount between them, among them. So Funmi, 3/8 times 2895. So you also have this amount. Then Anu, 1/8 times 2895, that is 361.9. So if you add it at the end of the day, you see that you balance your account. So that is the appropriation account. Very simple. It can ease your attention if you are not asked to prepare trading. Since you have been given net profit, so we just prepare appropriation immediately. Now we are not told to prepare current accounts. That means they are bank accounts at the end of the day. Now this is the current account. Don't forget debit side and the credit side. So this is their bank account. So what we just do is that you write Adedoyin, they have a separate account, Funmi and Anu. Then on the credit side, you also have Adedoyin, Funmi and Anu. And credit side is the amount that comes in for you, and credit side of current account is the amount that has been paid by the partner. So it reduces their bank account. So now you can see here that we are not given opening current account, which is balanced, so we just leave that. So now let's begin to pick this one after the other, because this amount this also is part of their money, so it comes into their current account. So it's not something that is very difficult. You just transfer all this information into their account. So interest on capital. Interest on capital, Adedoyin, we have 250, Funmi, we have 200, and Anu, we have 50 naira. Now, Anu salary, because it comes to, they paid it directly to their current account. Now, Anu and Fumi, they are active partner, while Adedoyin is not an active partner. So Adedoyin is not entitled to salary, while Anu is 750. Fumi is 750 and Anu is 1,000. So that is that. Then their profit. Their profit is Adedoyin 1,475, because you have is also part of the money that comes in for them. These are the money that comes in for them, so it has to be directed to their personal account, which is their current account. So 361.9. Now, and do you know something? At the end of the day, this is the amount that comes in for them. But something happened. They have drawings. Don't forget, they draw money from the company, so they have to pay that money back. So when they pay money back, they pay it out of the money that they have in their account. So the drawing of Adedoyin is 1,000. Fumi is 200, while Anu is 900, and they are going to pay interest. So it also comes out from their current account. They pay in drawings with interest. So we have interest on drawings. This is your interest on drawings. So interest on drawings is 50. Fumi 100, and Anu 45. So let's now see the actual amount that will be in their personal account, which is the current account at the end of the day. So here we go. So let's first do that of Adedoyin. Adedoyin here, if you add this together, you have 1,697.5. You see that it's greater than this. So Adedoyin balance. Adedoyin balance CD is when you find the difference of this and this, you have 647.5. So that is 1,697.5. Now let's go to that of Fumi. You see that Fumi, this is 2,100 and this is so this one is more than this. So Fumi, we have overdraft. They call this one overdraft. He has spent more than he has in the current account. So that's why we have credit balance. You must not have a debit balance, because this is the amount that I draw. This is the amount that comes into his account. So that means he is withdrawing more than he has. So he has what we call overdraft. So he has overdraft of 64 naira.4. So let's balance it. So that means he's going to pay additional 64.4. Now Anu, we add this gives us 1,411.9. When you add it, you see that it's greater than this. So he has a debit balance. So Fumi has a debit balance which is 466.9, and that is 1,411.9. So this amount, this balance BD, is what is going to balance sheet at the end of the day, because when you are asked to prepare balance water bill, when you are asked to prepare balance sheet, this current account and capital account remain the same, but this current account is what is going to the balance sheet. You just write here is the current account in the balance sheet at the capital side. You just write 646, this and this. So that is what is going to balance sheet at the end of the day. So this is the amount that you have in balance at the end of the year. So this is your bank account at the end of the year. So that is the question for appropriation, profit and loss account. Now we'll be going to another topic, which is the admission of partners and goodwill account. Topic 5. we'll be talking on admission of, if talking about a partnership. Now, we'll be talking on admission of a new partner and goodwill account. And when we're talking about admission of new partner, is that when there has been an existing partner, it might be 2 or 3, of which they wanted to admit another new partner into the partnership. So how do we prepare the account? What are the necessary things and necessary procedure to follow when we are to prepare admission of new partner? So what we are to prepare is revaluation account. Revaluation account. When there is an admission of new partner, what the partner will do is that they will revalue the asset of the company, because they are admitting another new partner. So when they revalue the account, the fixed asset and other asset, they revalue it, then they share it according to their share profit with you. So now what is a revaluation account? Evaluation is the process of bringing into record the actual, true or current market value of the asset and liability of the business. You know, the partner has a balance sheet at the end of the day. So when there is a need for admission of a new partner, then they will revalue that asset, liability in the balance sheet to know the market value of that asset and liability at the end of the day. So most of the time there will be profits, and most of the time there will be loss at the end of the day. So the first thing we have to prepare is a revaluation account. Then we have a goodwill. What is goodwill? Goodwill is the benefit and advantage